Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody. Let's take a look again on euro currency. So once we just starting to talk about the possible upward action, deeper upward retracement, maybe appearing of the double bottom here or something of that sort. And so we've got surprise from the market, which is not actually very pleasant for the bulls, but maybe inspiring for the bears. So you could see on the daily chart we've got the bearish grabber recently. So market was not able to pass through the resistance that we have around 116 area, 1610, and it's formed a potentially bearish pattern that actually suggests the taking out of these lows. So that suggests drop below these lows, which means that it really hold the hazard to the all potential bullish short-term construction that we have here, because drop below the lows just no double top, sorry, no double bottom. Maybe some different pattern will be formed, we do not know, but this is put under question the appearing in general the bullish performance in the recent couple of weeks. This is the first moment. Second moment is that actually we have the same stuff on the dollar index. So we'll take a look on the dollar index chart. You could see this grabber here as well, which suggests taking out of this top. And theoretically, if you will take a look at this action, so we could see some hints on the possible, well, not very accurate, not very harmonic, but still it starts looking like this type of action, right? So it might be something on that sort. So that's what about the dollar index. On the euro currency, we do not see the same pattern. Overall shape looks a bit different, but anyway we have the grabber as well on the euro currency, and it changed the situation significantly. Why? Because currently the pattern that is forming on the lower time frame that we were treating as the potential bullish pattern that could trigger upward continuation, currently it's not enough for a taking long position to possess yourself on a daily chart on the long side. Why? Because by recent action, market was not able to change the trend to the upside. Now we have the bearish trend on the daily, we have bearish trend on the weekly, and actually we have the bearish trend on the monthly. So from that standpoint, theoretically, how we should do if we would get the changing of the trend, we would in this case wait for a pullback, for instance, and then when the market starts moving higher, we control the daily trend. If it still stands bullish, once intraday trend turning bullish as well, we're taking position on the retracement. That's the classical approach for Monopoly trading of the trend direction, using different methods. Well, this will be type of entry, so minesweeper, bushes, or whatever you would like to. So, but since we do not have the bull trend at all on the higher time frames, correspondingly, it makes no sense trying to catch some pullbacks or something of that sort, because overall direction stands bearish. This is first moment. Second moment is that actually, guys, we have also the bearish grabber. That makes the context even worse for a long position taking. That's why in the current circumstances, we could consider taking the long position maybe on hourly chart that we will show a bit later, but only for intraday purposes trading. So it's not some possession for a daily performance, for a daily reversal, on the daily chart. It's just some tactical trade that you could try to take if you would like to, but it is limited by the intraday time frame. So it will be for some minor pullback, but not for a major reversal and going to the upside. So I hope it's clear. So speaking of this pattern that we're considering, actually you can see that the important level here stands around 1562. Yesterday we said about the confidence that actually market stands right now at 1575. But ultimately, with this harmonic of the shape, the ultimate point stands around 1562. Well, taking into consideration the background that we have on the daily, it seems that market really could break it down and erase all this preparation for a possible up protection. So besides here, we do not see really very fast action. So drop on the slope of the head here is good, but rising up protection is not very fast. Besides here, market, as you can see, was not able to hit this neckline. So it's also some questions exist to this performance that we have here. So now we will be watching for this level, and particularly this level. That's what I'm talking about for scalp long entry, if you would like to, because here will be relatively strong support, and tactical bounce up from here probably will happen. And if you're a scalp trader, you trade on the lower time frames, on the 5-minute chart, for example, or 15-minute chart, that might be interesting, but not for taking the long position on the higher time frames, on the daily, for example. So now what we have on the lower time frame, why we also have doubts on the market performance right now, even if we're not taking in consideration the grabbers that we have. So first of all, what has happened recently? Market has dropped right to the confidence support, as we said, and that was the point that we specified for position taking. Our prediction was really nice. So it's more than enough to move stops to the break even here, but take a look what has happened. Market just washing previous stops, hits the OP and collapsed again. So also, guys, I would like to talk about this performance. We very often talk about the double repo pattern, and every time I'm talking that I prefer to see the second top is greater than the first one for a double repo, because this indicates the capitulation of the bulls. Here we do not have the double repo, but that precisely the performance that explains what capitulation of the bulls means. So first, when the market hits the first area somewhere, starting retracement, traders treat this just as a retracement and trying to take the position at the predefined fib levels. Actually, what the all traders done here, and that was actually what we were planning to do here, and we did this as well. So that explains why market gets this performance, because a lot of traders stepped in right at this point. But take a look what has happened next. Market trying to pass through this area, but power of the bulls was not enough to do this, and market collapsed. So this means the capitulation of the bulls, because market was not able to push the price for the previous top, and that already is not a retracement. This is just sell off, pushing the stepping of the sellers and washing out the short-term traders. Now this performance looks bearish. So to the downside, we have few targets that market could achieve. Most interesting here is the 1560, because we have this OP 1560 that agrees with the 50% level, and you know that 50% level is favorite level for the euro currency. And also we have here the 1.7 extension of this upward action. So I draw it as a butterfly, but correctly speaking, the bearish butterfly can't be formed, sorry, bullish butterfly can't be formed on the top. So it's just, I'm using it to be more presentation with this using of the pattern. So that's why I'm talking about the 1560, that it is suitable for a short-term long position. For instance, if you're buying here, here could be some pullback. That could let you to make some pips if you're trading on lower time frames. So, but we are not talking currently about, at least, the chances at this moment that market will turn up right from here and start up reduction significantly less than it was yesterday. So, because yesterday we haven't got this type of performance, and yesterday we didn't have yet the grabber that we have right now. So, for the bearish traders, you could consider the grabber trying to possess themselves on the short side with the stops above the top, which is actually an validation point of the grabber. Maybe, by the way, the pullback up from here, it will be the chance to go short, to catch the retracement that market will start forming here. This is one approach. For the bullish traders, well, this is the point that you could consider for a possible taking the long position. What you intend to do after that, well, this is up to you, because theoretically you could try to, for instance, I don't know, pull back here happens, you move stops to the break even, you could try to possess yourself the initial head and shoulders that we would like to. Maybe it will work. Maybe some data will be released. Maybe some authority will tell something about the current market conditions or something of that sort. It could happen. So maybe I'm not talking that these head and shoulders will not work, or it's definitely will fail. I do not know. But the chances currently stands less than yesterday that it will work. So that's why we could rely on some near standing target to catch the pullback, but relation on this entry with the anticipation of strong upward action. Currently it's a bit, well, not quite reasonable, I would say, in this manner. So that's actually what we have on euro currency. Let's keep watching what will happen, especially around 1560. If after retracement will happen, market will drop this level to the downside, well, that will be the clear signal that market is going low and these lows will be taken out. So that's why actually this level is very important, and let's keep watching what will happen around it.